You're demonstrating that we don't have a global consensus about crypto. Even in this conversation, and I agree that it still is early, partly because there is not a global consensus about some of these things.
I agree.
And I think some of the use cases, we're still extremely early in terms of scaled use cases. Circle is certainly one example that has started to have a scaled use case around a stablecoin. But I think the crypto industry, I agree, the next 16 years, I think will be better than the last 16 years because you'll finally see applications emerging that up until now have just been the store of value story or speculation.
Hey, what's going on, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Now, imagine waking up to the market that's supposed to be soaring on lower rates, global handshakes, only to watch billions vanish in hours, leaving Bitcoin teetering on the edge of a cliff that it hasn't touched in months. You're not alone. That knot in your stomach, it's the same uncertainty that's gripped traders worldwide today. But here's the quiet truth slipping through the chaos. While the big players debate cuts and tariffs and fresh wave of institutional money, it is quietly flooding in through new doors, like the first ever ETF for a DeFi powerhouse that's already surging 110% this month. Stick with me because in the next few minutes, we're going to be cutting through all the noise, spot the real moves that can turn this dip into your next edge. Plus, we're going to be heading over to X to find out all the breaking news that's happening in the crypto world today. We're going to head over to Altcoin Pro University and take a look at this 21 shares ETF filing for Hyperliquid and find out why is the market bleeding even after this US-China trade deal. And finally, at the end of the video, we'll be jumping into the charts for XRP, looking at very key levels of resistance and support that you need to know about right now. And we're going to be taking a look at the long-term and short-term momentum waves and so much more in today's video. So if you're like most people where you don't get the opportunity to spend hours a day doing crypto research, well, that is what we do for you every single day on this channel. So make sure you subscribe right now. And if you are still feeling bullish, let us know by commenting 777 down below and smashing that thumbs up. First things first, we're heading over to CoinMarketCap, checking out the overall health of the crypto market today. We are down now to $3.65 trillion total market cap. That's down 2.13 in the last 24 hours. We have had $186 billion worth of trading volume. Fear and greed index slipping back into the fear levels, 31 out of 100. Altcoin season continues to hover around that 25 level, currently at 28 out of 100. Basically been down in these ranges since October 10th. Bitcoin dominance continues to surge to the upside. We are now at 59.4%, all the way up from 57.7 back on September 7th. Bitcoin ETF inflows having a massive, horrible day today. Outflows of $470 million in the last 24 hours, bringing the total net for the week to minus $119 million. Ethereum having a different reaction this week. We are down $81 million today as outflows for the ETF, but for the week, we're up still. $298 million worth of inflows for ETFs of Ethereum. Top 6 cryptos by total market cap. Number 1 is Bitcoin at $109,700. Number 2, Ethereum at $3,800. Tether at number 3 at $1. BNB now taking over the third place position from XRP at $1,086. XRP continuing to drop, now at the number 5 spot at $2.47. And Solana wrapping up at number 6 at $186. And as you saw in the intro of the video, Black Swan Capitalist posted the video here of Brad Garlinghouse just reminded everyone the era of speculation is ending. Bitcoin sold a story. Utility built XRP. Once clarity hits, only real use cases survive. Now, there's been a great amount of FUD going on about XRP over the last couple of days because of Solana getting a new contract with Western Union. Come to find out, Solana actually paid for that contract, but it did start a massive debate back and forth, mainly led by the Wolf of All Streets on X. And this debate went on, and it went so far that Ripple's ex-CTO, now he is retired, member of the board, David Schwartz, aka Joel Katz, he actually responded back to the hate and the FUD that was going on. The Wolf of All Street said, "Can we have a proper discussion about this? Very curious about the role of the token itself being XRP because of Ripple, the company. Does it play in the ecosystem and how much current adoption there is versus theoretical value based on what is being built, not a sought. That's the nature of new tech." And David Schwartz did respond back saying, the funny thing is that I think that most of the value of most of cryptocurrencies comes from expected future speculation. So if what you care about future price changes, what people think will happen is much more important than what already has happened. Look at Bitcoin. Most of its current investment thesis is something like, imagine if most companies start storing 1% of their treasury in Bitcoin. What will it do to the price? What that's saying is that in the future, more people will speculate on future price appreciation than speculate currently. It's not even based on expected future utility. It's based on expected future speculation. I want to believe utility matters. I really do. So what they're both saying here is the fact that not just both, but all cryptocurrencies prices going up is that everyone has this hope and pray mentality that it will be worth something in the future. We have faith in the fact that it's going to absorb more liquidity and the price is going to go up. Is there some utility for Bitcoin? No, not really. Can it be a payments rail? Yes, it can eventually. Is there actual utility for XRP? Some debate yes, some debate no. Joel Katz himself, David Schwartz saying, nah, not really, not right now, because banks aren't actually using XRP at the scale that it could be used for. And as we see here, Wolf of Wall Street summarizes this. He is completely correct here. The value of the token at this point in time is based on expected future speculation, not utility. David Schwartz was building Ripple and has very reasonable and pragmatic view that many seem to find offensive when articulated by me. Now, this is what everyone talks about with XRP. We're talking about when they flip the switch, XRP is going to $1,000. Well, more and more people are starting to wonder, when will this switch be flipped? And still continuing to do more deep dives into this, Wolf of Wall Street posted something else today besides what all of that went down yesterday. But this right here is something that crypto investors really need to pay attention to, in my personal opinion. Crypto has a huge problem. And it's one we almost never talk about. And this is actually one of the major FUD issues for Ripple, right? Everyone talks about how the first of every month, Ripple unlocks some crypto XRP from escrow, and then they dump a bunch of XRP on the community, causing the prices to go down. It happens nearly every single month. Well, how do founders make hundreds of millions or even billions of dollars from tokens that they created before their products prove real utility or adoption? In traditional markets, value follows performance. Founders get rich because their company builds something people use, generates profit, and grows over time. In crypto, it's often reversed. Tokens launch first, valuations skyrocket on speculation, and then the founders cash out long before their product is actually battle tested or the network achieves meaningful usage. The result is a strange inversion of incentives. Enormous wealth built on potential rather than proof. And because tokens trade globally, that value is extracted from retail participants who effectively subsidizing the experiment. So what he's saying here is that a lot of cryptos are just a GoFundMe, right? So they're running a GoFundMe for building their future product. It's kind of like how you'll see some people go on Shark Tank and they say that they have this idea and they have this product, but we need more investors so we can take it much larger and really turn it into a multi-billion-dollar company. And that's what a lot of these cryptos are doing right now. Are there some utility that these tokens are doing? Yes. But right now, it is all based around speculation, even as David Schwartz mentioned in his post. And he says, I'm not saying founders shouldn't be rewarded for innovation, many building genuinely transformative tech. But when billion-dollar fortunes are realized before success is earned, it raises a fundamental question. If the future value is still undetermined, why are the rewards already realized? And that brings me to the next post here from Zero Hedge. When we're talking about AI, like the big thing going around right now is that AI is in this massive bubble and it's going to pop just like the dot-com bubble. But these AI companies are actually generating earnings. It's not just speculation. See, all of crypto right now, for the most part, is based on speculations. Let me know down in the comments section if you disagree, and prove me wrong as well in the comments. Now, I'm a huge crypto fanatic, been in crypto since 2015, believe on it, changing the world. We even have an entire university, an entire classroom built on crypto, and we believe in it to the next level. But what are those crypto companies actually creating? We haven't seen a product-based crypto company take it to the next level, earning billions of dollars over time. But speaking of earning billions over time, we touched on this a little bit yesterday, but Elon's newest trick, your parked Tesla, is now his data center. And we talked about, obviously, Tesla. I mentioned this the other day. I don't own any Tesla stock. I probably should buy some and probably should have bought some, because what it is doing is revolutionary and it's changing the world. And will crypto do that eventually? Yes, but like, where is the actual tangible profits that the companies are making besides just investor money, right? And that's the big question, like why people get frustrated with Ripple. Where is the income that Ripple is generating that then can be put into the business of XRP? Well, we know you can't buy shares of Ripple. Yeah, I mean, you could buy them privately, but it's not a publicly traded company. So is it smarter to hold Ripple, the future stock, or is it smarter to hold XRP, the coin that might do something in the future when utilities finally adopt it? But going back to Tesla, why build $1 billion data center when you've got tens of millions of Teslas sitting in driveways with 1 kilowatt of interface capability in each? Google and Amazon are building $1 billion server farms, burning that money. Tesla's fleet could become the world's largest interface network using hardware that's already deployed, already maintained, and already connected. The elegance in the efficiency. No new real estate, no massive construction projects, no grid overload in one location. And I was actually talking about this with one of my real estate investor partners today. And I said, I think Elon Musk is from the future. He keeps on building all these things that are future tech, and he's the richest person in the world. It's like that one movie where Hot Tub Time Machine, where they go back in the future and that one guy invests in Google and he calls it Lugal. He gets super mega rich, right? That's what Elon Musk reminds me of right now. And it's almost like he had this idea already when he was putting this potential thing in place. He came out with, he wanted to build AI with OpenAI. He was one of the very first investors. Obviously, that partnership relationship went sideways, so he decided to build his own AI. Why was he wanting to build his own AI? Well, because he already had his AI computers he knew were going to be going out into the streets. And he did even comment on this because someone brought it up yesterday. It was actually Nick Cruz who brought up the initial idea. And Elon commented back, I am increasingly confident this idea could work. Now, obviously, it's getting more viral spread today as well because Mario reposted this, has a huge following. But it just seems coincidental. But it's one of those like, is it a conspiracy or is it real? Every conspiracy continues to come true. How does Elon Musk know to build all of these future things that are always going to be successful? And most of them, they're at the brink of destruction, right? Like Tesla almost didn't work and it somehow miraculously did. And then SpaceX was going bankrupt, was never going to make it. And now it's literally going to Mars. Like, come on, dude. This stuff is just too coincidental. Now, I did want to touch also on the next subject is going back to the Western Union, why people are freaking out and fudding the crap out of XRP right now. What most people didn't know, and this is a great post by Crypto Bitlord, what no one told you about this is that Western Union did a $50 million contract. They paid, Solana did $50 million for a 6-month deal. So it might not even work. When Solana stops working, which we know that their network goes down frequently when Amazon Web Services goes down, well, Western Union payments will also shut down. In comparison, Ripple has acquired Hidden Road, clears $3 trillion annually, G Treasury, trillions of dollars in payments, 160 countries, Rail responsible for 10% of all stablecoin-based payment globally, and XRP sits at the central of it all. So what's interesting is, like we were just talking about, when will utility actually kick in? Now, all these puzzle pieces do fit together, but when you take a look at the XRP price, something's not computing. If all of these things that are supposedly lined up where the world's finances run on XRPL using XRP, the token, it would have a surge in value, not these crazy shifts. And we'll get into the charts here later. So as you heard with David Schwartz, this is a faith-based system right now. Unfortunately, some people as founders are taking advantage of the people that have faith in that company doing well. And some other companies are not taking advantage of their clients. But that's why you see what's called a rug pull, right? You have these key opinion leaders out there saying this token's going to be amazing. It's going to go to $100 billion, just like every other meme coin. And then boom, it's a rug pull, right? Because those are the developers, the creators making a ton of money before it actually proves itself. And just in, Federal Reserve to end quantitative tightening on December 1st. So that's really positive news. Rep. Warren Davidson calls for repealing the 16th Amendment and abolishing the IRS. That's really big news. Trump has also said that he wants to do that, creating the External Revenue Service, or the ERS. And ever since Jerome Powell yesterday came out and said that they're probably not cutting rates in December, $300 million was liquidated from crypto yesterday. And like I just said, Jerome Powell does say December interest rate cuts look far from certain. I actually watched this live while he was talking about it. And when you take a look at the charts yesterday, what happened is he was talking, came out, and then the market absolutely tanked to the downside. Now, this is yesterday's candle, another down day after the announcement day. We have our brand new candle that just opened up an hour ago. But this is one of my favorite posts I saw all day from Ash Crypto, because all of these things, all these puzzle pieces are falling into place, and we should have an epic rally for crypto. 2 weeks ago, we wanted federal rate cuts, which we got that yesterday. U.S.-China trade deal, we got that yesterday. QT to end quantitative tightening, we got that officially locked in. Altcoin staking ETF approval. Now we got everything, yet the markets are even lower. WTF is really going on, ladies and gentlemen. Okay, heading over to Altcoin Pro, let's talk about some positive news. And that is, we've been on Hype Token since it launched. We were actually in on the airdrop of this. Definitely, if you want to get into some really great knowledge about crypto, you need to join Altcoin Pro. Link is down in the description. Join it. Learn as much as you can. Go through the courses. If you don't like it in 14 days, cancel. Everybody in there absolutely loves it. I mean, look, post your wins section here. 3 hours ago, a win. 4 days ago, a hype win. How about 11 days ago, a win? 9 days ago, 7 days ago, 5 days ago, 5 days ago, 9. And these are people winning actual trades in crypto. How about a 509% win on a 3x leverage long? That's absolutely insane. What an amazing win. Here's a Bitcoin 20x win playing the range long, 20x on 54% victory there. One of the coins we talked about, AIA. I thought Zora was fast, but this is nuts. I put $1,000 down and 5x, and about 50 seconds later, I hit the flash close because it was moving so fast. Boom, 5x leverage, 44% win. So if you want to be like these people, getting market updates, altcoin picks, DeFi yield picks, airdrop picks, the link is down in the description. Get started right now. Let's talk about Hype. So 21 shares just filed with the SEC to launch the spot ETF that tracks Hype. Hype is the token that's powering hyper-liquid decentralized perpetual exchange. If it gets approved, this would be the first spot ETF based on the DeFi native token, not Bitcoin, not Ethereum, not XRP, not Solana, but a DeFi native token. This is massive and huge. The ETF will hold Hype in storage with Coinbase and BitGo. It'll stake 50 to 70% of its holding for passive yield, settle creations and redemptions in cash. Hyperliquid is a layer 1 that popped off in November of 2024 airdrop. Since then, Hype has blown up $13 billion evaluation, and plays a key role in staking, governance, and fee burns. And remember, we called out BitGo's institutional custody move a few months back. We specifically said this was setting the stage for a potential hyperliquid ETF. Well, here it is. My take, this is a big deal. TradFi is now eyeing DeFi protocols beyond the major chains. A Hype ETF is not only validation for hyperliquid, but also a preview of what's coming for other tokens running real on-chain volume. And this was by our analyst, Curious J, does a phenomenal job helping educate our team. Crypto markets are bleeding despite rate cuts. U.S.-China trade negotiation. What's really going on? So on Thursday, U.S. decided to suspend restrictions designed to limit access to Chinese companies. These ease restrictions were given in exchange for China agreeing to suspend its export controls on rare earth minerals used in electronics and military defense applications, according to Reuters. Scott Bessent's announcement follows several weeks of softening trade tensions between the two countries, which is normally a positive catalyst for crypto. However, the recent Federal Open Market Committee meeting and Federal Reserve Chair Jerome Powell's comments, including that the FOMC members have strongly different views about a December interest rate cut, caused the markets to tumble Thursday. And if we head over to CME Group's Fed Watch and we take a look at the December options here, this has actually become more positive, believe it or not. Yesterday, this was a 50-50 split. Today, a potential reduction has gone up to 74.8%. So that's actually positive news, even on the backs of the comments yesterday, Jerome Powell, And it was such a bad statement when he said strongly differing views. You can actually see in the markets here, markets were pumping not pumping, but they were rising all day to this level. 11 o'clock is when he came on and gave his speech, literally right here. So we were trading sideways. He gave his speech saying December looks like we're not making rate cuts, and ba-boom, to the downside ever since then. Now we are finally starting to rally back. This is on the hourly charts for XRP. So despite all this, there's typically a gap between the end of quantitative tightening and the beginning of quantitative easing. There's like a neutral stall position, which we'll be going through when liquidity is actively pumped through the financial system, meaning crypto prices can sink further to the downside until liquidity actually arrives. The price of Bitcoin, now to 109,000, fell by 35% in 2019 after the Fed ended quantitative tightening. So everyone was excited, let's end this quantitative tightening. But if we look at history, it actually did the same exact thing. Prices decided to fall in 2019 when they ended QT. Powell's comments on Wednesday at FOMC press conference also left investors uncertain about the direction of monetary policy. Powell said inflation has eased significantly from its highs of mid-2022, but remains somewhat elevated relative to our 2% target goal. He also added there were strongly differing views about how to approach in December. A further reduction in policy rate at the December meeting is not a foregone conclusion, far from it. And boom, markets tanked. Literally after those words, I was watching it here. Let's go back to these charts. And this is the hour. We're going to mark it with our vertical line tool. This is it right here. We're going to actually drop to the 5-minute mark and take a look where that is. So this is 11 o'clock. He starts talking and literally, boom, right here is when he says that exact statement, markets start tanking. Want to see something even more crazy? Let's look at NASDAQ, right? The index fund right here. So price, he's talking. It's holding pretty steady. Boom, the moment he says it. And at a 194-point drop, literally in 5 minutes. Absolutely crazy. Now, we did recover at the end of the day, which was nice. Prices continued to drop over today, though, with a rally late in the evening. But over the course of the last 24 hours or so, over $1.1 billion was liquidated from the crypto market following 24 hours, causing the price of Bitcoin to drop below 107,000, all the way below its 200-day exponential moving average, even a critical dynamic level of support according to data from Nansen. Now, as we take a look here on the Bitcoin chart, the blue line is the 200 exponential moving average, and we can see price literally landed on it with the body of the candle, which is positive. Could we rally here? Very possible. Did have a wick down below. One thing I don't like is our short-term momentum wave has started to curl down. It has lost its momentum to the upside. Long-term momentum on Bitcoin on the daily charts here is bearish still. It was starting to try to make its way back and cross above bullish, but unfortunately had a negative reaction over these last 4 days. Having a look here at our XRP charts that we've been following, the red lines are based upon the weekly closed bodies, and the white lines are also the weekly closed bodies. So right now we do have a nice resistance ahead of us at $2.77 if we can make it there. Right now we have actually tagged exactly into our support level, which is $2.39. That is also a weekly candle body close of that level. And that is from 2 weeks ago, and last week's candle body closes right here, as we can see, starting to make the turn to the upside. We have 2 days, 23 hours left in this candle here. Now, what I will tell you, as we were looking at this is XRP charts, right? Same thing here. Our short-term momentum, unfortunately, has started to fold, switching back to red. So that is bearish on that. Now, that could do a fake out, right? So we've seen this in the past where price fakes out to the upside, but drops back down and then finally rallies like we see right here. This could do the same thing, but a rally to the upside. And the reason why I point that out is because if we look at the weekly, this is what I like the most, is the long-term opportunities, right? Now, some of you out there are day traders trading on much smaller time frames, but when we're looking at like swing trade opportunities and you're not being emotional about your bag, right now, the weekly long-term momentum is still bullish. We have not crossed into bearish territory yet, so that's positive. Short-term momentum has reset back to zero here. Last time we reset to zero was here. Price started making its turn up from $2.15-ish to a new all-time high of $3.66. On the weekly charts, we had this is our swing low. We finally leveled out in a low. Then we had a higher low, and very potentially we have another higher low, creating an opportunity for a next higher high. So we'll continue to watch this. Now, what I'm really looking for on the daily charts here is in the next 24 to 48 hours. Unfortunately, we're going into the weekend. I would prefer it being Monday, but our long-term momentum wave, which this is called the Wolfpack indicator, fast length is 10, slow length is 30. It gives you a really good idea, right? So last time we got faked out here on the pump to the upside. So it pumped up and it failed. But we could have been smart and understood the fact that we were running into a resistance level here, which we knew was a potential. And sure enough, it failed. So we wait for confirmation. It was not confirmed here. Right here, same thing. But last time we did get confirmation, which was here. We went bullish long-term, short-term momentum climbed up, and we absolutely went crazy to the upside. So what are we looking for? Exact scenarios right now. Well, price to the downside, acting as a support, is right here, $2.39, all the way down to the supply and demand level of 229. If we lose those levels, we're in trouble, and then we're going down to 223 to 220. I don't even want to talk about lower levels until we get there. That should not happen in the next 24 to 48 hours. To the upside, we do have a resistance at 277 we talked about, and then we have a supply and demand zone when we get to that high at 305 to 294. All right, now what we haven't looked at for quite some time is our weekly spider lines chart. Let's go take a look at our spider lines. So as of right now, price did come down, bodies of candles. Obviously, we had that massive wick to the downside, which did tap off of one of our spider lines. But right now, we're holding good support at this level here, which is our $2.25 spider line. We surged to the upside here, unfortunately running into the spider line right here, which is our 259. It got above it for a day, but unfortunately rejected. We need to get confirmation of close above this level, and then we'll be moving up to the next level here of 294. And when we turn this on to logarithmic instead of standard candles, we can see here our support level at $2.30, resistance up here at 281, which was holding as a support, unfortunately broke down to the next level here. But then once we break here, we have a real opportunity of surging all the way back up to the 360s. So we'll continue to keep you updated. Make sure you subscribe. Make sure you smash that thumbs up. If you got value from this video today, smash the thumbs up. Don't forget to sign up for Altcoin Pro, link down in the description. Try it out for 14 days. If you don't like it, free money back guarantee, but we know you're going to love it.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt, so this is your insurance against the system. To learn how you can earn passive income on your coins Every single day, while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today, and it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.